Irish CGT logic is calculated in CashCalc for any withdrawal from a direct investment account minus any annual exemptions and adjusting for accounts held jointly. So to show you an example, if we come back into CashCalc, select Cashflow, input some timeline, select savings and investments, and to add a direct investment account, just select add investment pot here. We're going to call this one Davy investment account. The category is obviously very important because that's going to affect any tax that on the income taken from any of these pots. So we're going to assign this and label this as a direct investment account. Clearly the owner is equally important because that will affect any tax taken. So is it Sherlock? Is it Edith? Is it jointly held? We'll come back to jointly held in a few moments. This one's Sherlock. How much has been invested to date, essentially before the cash flow starts? Well, to date, 50,000 has been invested. How much is that pot worth today? Essentially, therefore, CashCalc now knows the gain that pot has experienced. From today, total return. So what's the total return expected over the coming years? We'll expect a 5% return every year. And how much of that return is going to be income, if any? If there's no income expected, that's fine. We can leave this blank, but you can have either and or interest or dividends. So you can actually have both. For this case, we'll just have one. We'll just say, yes, out of that 5% return, we expect perhaps 2 of that to be dividend income. Then we could get to decide whether that income is reinvested back into the Davy investment account or whether it just simply gets paid into the current account. Once you save that, I won't bother saving this one because I've already got one in the background. We've got the Davy investment account owned by Sherlock, direct investment account, 50,000 originally invested, today's value 120, growing at 5%, and the dividend 2% a year. Now, every single time you tell CashCalc there is an income or dividend or interest, you'll notice by default under that contribution tab, it will automatically be added for you. So you can see quite clearly there a new line item, Davy investment account of 2%. That 2% is being paid into the current account. Clearly, if I had a signal that it was being reinvested back into the Davy investment account, that will say Davy investment account instead of current account. All of this obviously impacts the cash flow. So if we click on the cash flow tab on the left, savings over time, you've got the Davy investment account at the very bottom down there. Money in, money out. You've got a couple of line items in here. You've got the Davy dividends, Davy investment account dividends coming in, a very slim slither of a couple of percent coming in. And then you've also got the deficit met by. So if there's any deficit having to be met by the Davy investment account, it's signaled in there. Now, clearly, once the client takes income from that pot to cover that deficit, taxes are going to have to be paid, CGT. So again, completely itemized under the taxes tab up here. There it is. Every single year after retirement, the client's taking money out of that pot and they're therefore paying CGT. And again, that can be turned off and on by clicking that tab at the bottom. For a more granular display, if we come down to yearly breakdown, if we go down to that 4th year where the client starts taking money from the investment account, every single year will show the dividend payment. So for this particular year, again, the gross amount that was paid, the net amount the client essentially received because the taxes minus the taxes, and then the income tax calculation minus any credits as well. On the right-hand side, there's the ad hoc withdrawal from the Davy account that was needed to cover any expenses. 35,000 was taken from the investment account. The client only saw 28,000 euros of that because 6,000 or 6,500 euros was capital gains tax. And like with any inputs or money in from CashCalc, you'll always get the full tax calculation breakdown underneath how we arrived at 6,514 euros. If you click on the liquid assets tab at the very top, this shows all the contributions and withdrawals going in and out of these pots. Again, if we look at the Davy investment account, we'll see the 35,000 being withdrawn from the pot. Had I have selected that income was reinvested back into the Davy account, clearly at the moment it's being reinvested back into the current account, that contribution will be simply labeled in here for you. Now, this all changes if it's jointly held. So let's come back to our inputs and timeline. Let's force this to recognize a jointly held account. If we go back to savings and investments, go back to that Davy investment account, let's edit that. Let's change Sherlock to joint, and then you can direct the system how it's jointly held. In this case, it's just 50-50. Click on update savings pot. If we go back to our cash flow model, not much was really changed in terms of money in, money out and savings over time, but the taxes have clearly changed. You can see there's now 2 lots of CGT, one for Sherlock, one for Edith, and again, separately labeled at the very bottom down here, so you can turn those on and off. And then under the yearly breakdown tab on the left hand side, first and foremost, you can see a kind of a running total under the liquid assets tab for Davy investment account. you've got the 50-50 split for the two of them. So on this particular year, the Davy investment account's worth about 120,000. So it's telling you how much of that pot is owned by each client. But if you click on the money in tab, again, this has all been changed. So the dividend payment being received is now split between Sherlock and Edith. So it's telling you, or itemizing the different tax calculations for each, and the same as well for the ad hoc withdrawal from the Davy investment account. Now suddenly we're paying less than €6,000, so the CGT liability on that ad hoc withdrawal is a lot less than it was before, because again, both clients are itemized separately, and you can see that they're using their annual exemptions, hence the lower CGT. So that's how CashCalc can now deal with Irish capital gains tax on a direct investment account. Hope you found that useful. Any further questions, feel free to reach out to the help desk.